Good day, folks. We are witnessing the Shanghai Composite outpace the S&P 500 this year by leaps and bounds, trading up 20% on the back of China's GDP outpacing the US and Canada, usually annualizing around 5%. But you're probably witnessing this in the mega cap, more famous Chinese stocks like Alibaba that's trading up 88% this year. Tencent up almost 50%, starting to retest all-time highs. BYD, the electric vehicle maker that does more revenue and profit than Tesla's entire business models combined, trading up 6% this year, has been consolidating, but offers a nice dividend and trades at a much more favorable value. And I'm starting to recognize that investors should have global market exposure in their portfolio for the relevance of, wealth preservation, and knowing that the S&P trades at much higher multiples and you're getting much better values in some of these other markets. And we're very lucky to start getting new ETFs like the Reliant Transformative China Tech ETF that is narrowing the exposure to these incredible companies. This trades on the NASDAQ under CNQQ, and this video is disseminated on behalf of Reliant. I'm leaving all the disclaimers in the description below. These are my own opinions. They do not constitute financial advice, and this video is for entertainment purposes only. But this ETF has been back tested, even though it only recently came on the NASDAQ market here. If we take a look at the back testing that goes back to May of 2019, these stocks have actually performed, returning an accumulative amount of over 130%. And if we just take a look at the current updated weightings and just see what the fees of the fund are, we take a look, the annual fund operating expense is at about 0.75%, and it's a lot more favorable than many of the mutual funds that trade in the United States. But if we scroll down, we can take a look, and basically these were updated as of November 17th. We can see we have Tencent holding that makes up 10% of the ETF, Alibaba at 9.5%. And this ETF does go beyond just the Shanghai Composite. It also represents some Hong Kong listed companies, but I like seeing that BYD's in here. And if we just kind of break down how they've been building this ETF out, let me zoom my head out of the way a little bit. They're looking to identify transformative technology companies positioned for long-term sustained growth. We move beyond conventional market cap weighted selection models by integrating fundamental investment research perspectives and incorporating R&D innovation metrics into our screening criteria with a dual theme of transformative tech and technology innovation and manufacturing upgrade. Leveraging our local rooted active investment research, China AMC categorizes China's transformative tech into two overreaching frameworks: technology innovation and manufacturing upgrade, which encompasses the following 8 major themes: semiconductors, digital technology and software, automotive and robotics, a high-tech manufacturing, and then from the manufacturing upgrade, smart home appliances, biotechnology and pharmaceutical companies, new energy, and advanced manufacturing. And a lot of people have been paying attention to China's AI expansion as well. The disruptive innovation of DeepSeek is reshaping AI dynamics worldwide and vastly reducing computing cost and breeding a global reassessment of inventing in the Chinese tech assets. With high performance, low cost DeepSeek models are expected to accelerate AI penetration, further driving widespread AI adoption across sectors, including robotics, advanced manufacturing, healthcare, and semiconductor chips. So this is another play that you're kind of building into beyond the US as China's, technological revolution and their build out in AI. So I think this is a really intriguing ETF, and it's nice to see that we're starting to get some exposure to these fast growing markets that trade at much more favorable values for those investors looking to build out that broad diversity, because the S&P isn't always going to outperform the broader markets, and China is an incredibly fast growing country that I think is appropriate to get exposure to. And again, these are just opinions of my own, but I will pass the question off to you. I'd love to know what you think about Reliant, this ETF trading on the NASDAQ under CNQQ, down in that comment section below. But as always, I look forward to catching you in the next one.